Now, looking at the market, we had equity turnover rising in yesterday's trading session, as well as the overall bourse, but prices remain pretty weak, particularly within the banking sector. Your thoughts on this?
Yes, of course, the market seemed to pick up yesterday. Last week, as most of the results had come out, we saw quite a bit of profit-taking, which contributed largely to prices coming off the way they did, and also turnover also coming off. But people started to come back in the market on the buy side. Of course, there's some counters that are still quite strong, such as NIC and Standard Chartered, which are trading income rights. So there's still a lot of interest in this, and generally there's a lot of interest in the banking sector. For example, Equity Bank, which is always a very popular speculative stock at prices of about 21.50, is bound to attract a lot of interest. We saw foreign interest begin to build on this yesterday, and we expect this to continue today.
Looking at the fixed income market, the 2-year bond issue for August expected out on Monday. What kind of results can we expect from this 2-year bond?
The market has come off quite a bit since the last 2 year was issued. Basically, analysts are looking at levels of anywhere between 10.5 and 11.5. As we draw closer to the auction date, this may come off slightly. So most of the market is quite interested in this paper. There's a huge demand overhang. So we should see an oversubscription, especially the market is quite liquid.
Looking at the secondary bond market, we have seen a rally coming through there, but yields are, however, seem to be bottoming out. Are you seeing a bottoming out of yields on that front?
Yes, the decline has been quite steep. In the last 2 weeks, we've seen most papers across the curve, apart from the long end, come off by about 150 basis points, which is quite steep for about 14 days. So we should see, I think as we draw closer to this auction, we should see interest begin to slow down as there's certain psychological levels, such as 10.5, 10%. Most people are still looking for double-digit returns. So moving to single-digit will scare off some investors, but and we may see the yields bounce back up somewhat, but we expect this decline to continue, albeit more marginally.
And on the interbank market, we are currently sitting on single digits. We saw the interbank rate coming in at 8.2% in yesterday's trading session. Now that's down by about 60 basis points. But the market, there's a lot of liquidity still in the market. Could we see this rate possibly going to about 7 in the coming days?
Yes, in fact, even in the coming days. Today we expect it to come below the 8% level, seeing that it came off by 60 basis points yesterday. The market still continues to see a lot of liquidity coming in from maturities. So this will continue to put downward pressure on the interbank rate. We've seen CBK come into the repo market, mopping up aggressively. Yesterday they picked up about 3.5 billion at an average rate of about 8.4%. We expect this rate to continue coming off, and yes, the market is quite liquid, but against what most of the market expected, the shilling is still holding out. It strengthened quite a bit yesterday to about 83 levels. I think this is mostly because of these quite agricultural exports.
Looking at the fuel prices, expected to come down by about 2 shillings in today's trading session, but pressure still remains in the coming months. We have seen oil prices reaching levels of about $115 per barrel.
Yes, fuel prices are coming off, starting today by about an average of 2 shillings. This should have a positive impact on inflation numbers for next month, and also actually for this month, because they take the two weeks in the middle of the month to measure the inflation numbers. So this should have a positive impact on the inflation numbers. But globally, fuel prices, we have seen a ton of prices begin to rise, and there's usually a 2-month lag in our market with the international oil prices. So we should feel these effects probably in October or November.
Looking at the macroeconomic environment, looks to be pretty positive. We have inflation coming down, the shilling pretty steady at around 83, 50 at this stage. Looking at interest rates going forward, we do have the MPC meeting in September around the 5th. What do you see the MPC doing at that meeting?
Of course, we expect they'll cut the CBR further. I mean, all factors point to it. Inflation has come off, interest rates are coming off, and also looking at the external factors, they seem to have stabilized somewhat. So we expect them to come off, although there still are some threats, such as global fuel prices, as we mentioned earlier, and also what we've seen global grain prices begin to rise. So this might also impact our food security somewhat. And this is always a big part of our CPI index. So they may be a bit more careful, maybe not such a big cut as most people have mentioned. Probably people are talking about levels of about 350 basis points. I think this is a bit steep. We might see something slightly less than that.
Well, Ken, looking at market performance in yesterday's trading session, the bourse up in yesterday's trading session, what kind of moves can we expect today?
Yeah, I expect turnover will actually increase. A lot of local investors have come back on the buy side. Foreign investors, as I mentioned, have come back on the buy side. We will continue to see stocks such as KCB continue to move higher. It had come off towards the close of last week, but yesterday it gained, and we expect this to continue. Also, apart from that, we also expect agricultural stocks may also gain somewhat in this week's trading sessions.